Okay, good evening, everyone. Welcome to join the Mid-Author webinar series once again. And today we have pleasure to invite Mr. Kato to join our session. And he is the head of the Institute of Global Investment Learning at Invesco Japan. And before that, he also have over 20 years experience in the international finance sector. So he also worked in New York and also London and got his MBA in Columbia University. So he just recently in this year published a very exciting book, which is one of the best-selling book in Japan. So I think this is really a timely book. I think given that during COVID-19 also we see the stocks going up and down. Of course, that the investment is not only for the stock market. So that's why I think today it will be very valuable to have the discussion for this book and to learn like the latest trend and also the new concept from Kate. So Kate, the floor is yours.
Okay, thank you very much, Hangin, to introduce me. So let me show the slide to everyone. Now, do you see the slide of the big mountain? Yes. Okay, great. This is the logo of the Invesco. Okay, so hello, everyone. I'm so excited to talk about the new story about personal finance today. Most people have a very limited idea about investment, I believe. When you think about investment, most people only think about just money, but it is a very limited view. We should think about our whole life instead. I'd like to introduce the big picture of investment with unique slides and charts today. Regardless of your financial background, I believe you would enjoy the show. Okay. First, this is about myself. I'm Kato, Tokyo-based, works for the company called Invesco, which is one of the biggest independent asset management companies, headquartered in Atlanta, United States. I have been investment professional for 20 years, especially for global equity investment, like research analyst or fund manager. Now I write many articles and a book and holding the seminar to the public like this. I visited over 30 countries in my careers for economic and company research and lived in the US and UK for 10 years in total. That experience filled the gap between economic and financial theory in textbook and real world. I studied MBA, as Hangin introduced, in New York, Columbia, and passed some financial exams. I spent a lot of times when I was young for them, especially exams, but that was kind of the waste of time because in conclusion, textbooks are not the practical guide about personal money management. Okay, I have two sons. One is 11 years old and another is just 1 year old, very small. Very naughty boys and a lot of noise at home, but I really enjoy my life. I am an avid tennis player and joined the Japanese tennis league. Now I am ranked 70th, not now, before the COVID-19, at over 40 years old bracket. My son also plays tennis and we like many sports. Also, I like Japanese sake so much. Actually, my major in college is making sake, believe it or not. So many of my friends works in brewery of Japanese sake. But I changed my careers to finance and to global careers. So this is my new book. Looks like Japanese book with cartoon pictures, and you see some Chinese characters, so you understand somehow. My key messages are twofold. One is new portfolio called life portfolio. I'm sure your landscape of investment would dramatically change with this concept. Another is the relationship between society and financial products, which enrich us. The main concept of this book is the balance of your whole life. Putting money in financial product is just a tool for the big goal of life. Otherwise, you would be trapped by gambling and lose your wealth in general. Anyway, let's start. So, what exactly is an investment? This is a simple question, but somewhat difficult question. Think about that. When I am asked this question, I answer, investment is the seed to create wealth and happiness in our world. As you see the chart in the middle, investment creates growth, then that leads to wealth and happiness in our lives. Then bigger wealth goes to the next investments and creates much bigger wealth, and this cycle continues. Regardless of ideology or economic policies, the goal of us and the nation is wealth and happiness. Someone who knows and manages this cycle well would make oneself and society wealthier and happier. So please remember, everything starts from the investment, and investment creates wealth of us. Let's think about actual examples of investment from my daily life. Last month, I bought new running shoes to run from the office to home 3 times a week, like 30 minutes running. It means I invest my money in my well-being. Next, my wife recently bought a luxury shampoo, as much as $100, very expensive. And actually we quoted some, that is too much, something. But she said, that is not a waste of money. She said, this is a good investment in her beauty, meaning happiness and wealth in future. Yes, she's right. I agree. We sent our son to swimming class for the last 5 years. At the beginning, he couldn't put his face in the waters, but now he could swim from one end to another very easily. Likewise, parents invest money in their children in many ways. Those make children grow, leading to happiness and wealth in future when they are independent. Let's see investment more. At individual level, we don't spend money for just survival, no, but for our quality of life and lifestyle and personal development, like studying in MBA. Many of them are investment for happiness and wealth. At corporate level, companies spend a lot of money for investment, of course. They train their employees and spend a lot of money for research and development for future products or services, as well as capital expenditures, new factory line or new factory. The amount of customers' happiness by the result of their investment is equal to their profit. At national level, governments usually invest people's money, tax, into infrastructure, road, bridge, hospital, school. This function is quite important, especially when countries are poor. Anyway, we are surrounded by investment every day at all levels, and investment creates wealth of us. Having said that, what we learn and what we feel about investment is all about numbers, like how to make money, perhaps the way of gambling by financial products. Risk is defined as the price changed in a short period of time, like standard deviation. I agreed, math and statistics theory is very beautiful and tells us something important, like diversification effect, but not very practical by themselves only in real world. So what I introduced on the book is more about money. Your life comes first, your life. Then money comes second. Holistic view, including life, family, development, well-being, work is important. Risk is the imbalance of your genuine portfolio and blindness to that imbalance. Finally, we should know the connection between money and our society to understand the role of investment products. Okay, life portfolio. At some point in my career, I realized one thing. Financial portfolio theory developed in the United States is useful for institutional investor having money-only portfolio and many US citizens, but not practical to non-US individuals. After I lived in 3 countries and met a lot of people, I felt I need to summarize the right approach to us. Asian, like Japanese and Chinese, and others need different approach to manage their personal portfolio to have happy and wealthy lives. The right approach to the success of your finance is start from yourself, then understand the structure of the world. Finally, think about what is the appropriate financial investment for your unique life. There is no one answer. It really depends. But starting point is yourself. Never start thinking from financial investment. To choose financial investment, the mentality of how much is it or how much return is it are not good. Instead, what is this or what can that do for me is good. Anybody knows the word of human asset or human capital? This is not very popular word in economic class, but it's a quite important concept for your personal finance. Gary Becker, he's American and a Nobel Prize professor, introduced this concept in 1970s. He believed the potential of people so much with education and training, regardless of gender, race, and family background. He argued that the value of people are enhanced. Before his emergence, many believed potential of people is given and limited education were provided to people. So his contribution is quite big, especially in educational sector. Human asset is present value of future income, and to maximize that aggregation of people is the goal of many bodies like government these days. Okay, all of us have human asset, but to make its value materialize, we have to participate in the society. Once you take part in the society, like working or teaching something, you would get income, otherwise not. I could say the value of the nation equals to the value of the human asset of all the people there. So participation, working is quite important for our wealth. This slide shows how to calculate your human asset, which is called Leibniz method, and which is used in the insurance field very much. But it's very simple, just discount model. I guess you're interested in how much your human asset is, but remember, don't focus on too much details because formula include two estimates, expected future income and salary and years for working. Nobody knows them precisely at the moment. And you should calculate, so you should calculate with your current best assumptions and get rough numbers. Then revisit that if you change your career, employer, or lifestyle occasionally. It is very important to capture the value of human assets yourself, even with very rough number. Human asset is quite big and much bigger than you thought usually. Like Mr. A, 25 years old, has over $1 million asset in this case. And now Mr. A has 10,000 deposits at the bank. So how much is the total asset of Mr. A? To find that, you should combine his two assets together, and the pie chart showed the proportion of that. Yes, believe it or not, the human's assets dominate his genuine portfolio, life portfolio. The amounts and proportion of life portfolio is, varied each person, but the proportion tells you some insight, I guess. Human asset is quite big, usually, especially if you are young, and the main part of your portfolio. Today, audience is quite young, I guess. So I would like to tell you the importance of investment in oneself. Yes, you are the students now, probably, yeah. And investment in yourself heavily in top university in the world and in China. Let's think about 10% growth of each asset. If Mr. A grow his human assets by 10%, he gets more than 100,000 US. You know what? Saving 100,000 US deposit is not easy at all. So investment oneself is quite important. The base one is a matter, and future need and niche areas are the key for personal investment. And Gary Becker in Chicago University is going to talk about something like this. Another important thing is here, investment in yourself is not just for your wealth. Once you get higher salary, you could spend more money as consumptions. Then it contributes to salary to others. Like you buy clothes in shopping mall, that consumption goes to the salary of the shop staff. Salary raises of others then contributes to your salary. So don't be afraid to be rich or to have big human assets. Also, don't be jealous of others' wealth. Wealth of someone comes back to you finally. So we are win-win. Anyway, wealth and happiness come from personal development or investing in yourself. So don't stop investing in oneself. Let's dig in human asset further. Component factors of human assets are threefold. Will to work, that is a social participation. Second, well-being and investment in oneself. Perhaps the most important one is well-being. My grandfather always say the success of the life is well-being, well-being, well-being. Yeah, I agree with him. And the good thing here is all three are controllable by yourself, meaning human asset is very reliable asset. Okay, let's get back to life portfolio. After you capture rough amounts of your life portfolio, next step is to recognize two balances of that. One is domestic or foreign. Another is stable or growth. Try to break down the life portfolio in two ways. We will come back to this chart later, but think about what is your allocation. As for the proportion or characteristic of human asset, some key factors affect that. For example, your educational background and career choices, as well as your employment stability, affect that proportions, like your public officer or working in the startup companies. For example, if you are born in China and educated in China and work for Chinese clients, the allocation is probably skewed to domestic Chinese asset. Also, your human asset is usually considered as unstable asset as long as you have good health and will to work. So the allocation of your human asset is skewed to stable asset. Also, once you get married, I strongly recommend you to combine your asset with your partners, both conceptually and practically, in fact. Otherwise, a lot of troubles happens, in my experience. So life is together always. Have to be together. Okay, and this slide is one of my key messages today. Financial investment should be chosen to balance your life portfolio, not making money. Understand your life portfolio and its balance in two ways. As a result, the financial asset you should buy show up automatically. The good financial investment for you is once to create a well-balanced life portfolio. There is a famous proverb, don't put all eggs in the same basket. In other words, in my definitions, to balance your genuine portfolio, life portfolio in two ways. Financial theories tells you more detail, diversification in general, but I believe kind of big picture is more important than details of each. So for personal finance, I recommend you to focus on just two allocations of your life portfolio. In many cases, that is enough. The complicated approach seems beautiful, but are not practical as many assumptions are changed as time goes. Actually, the advantage of financial product is its mobility. Have you think about that? These days, you can buy many kinds of international financial products very easily, which was not the case 20 years ago, or my parents' era. We could make use of that advantage as much to balance your genuine portfolio. Human asset could be controlled by investment in yourself and changing your employer, but nationality and residency are not easy to change, especially once you get family. Anyway, we can make up for the low mobile characteristic of human assets by mobile financial asset. In many cases, people should buy foreign and gross financial assets to balance their portfolio. As I said, human asset is quite big and usually skewed to domestic more than you think. Open mind is the key, and don't stick to where you were born and what surrounds you. Just a reference, in my case, 90% of my financial assets are non-Japanese assets, like foreign equity and real estate in the United States. This is not to make money, but to balance my portfolio, because I believe my human asset is like 50% Japanese asset. Additionally, I continue to try to strengthen kind of my human asset, of course. Okay, next. From here, I talk about the relation between the financial products and society with big picture. This understanding is quite important as we should know well what we actually have and why we buy some financial instruments. Otherwise, any investment product seems the tools for gambling or just making money by taking risk. We should know that investment returns are byproducts of social growth and wealth. Otherwise, you get lost from the success of your life. Okay, the system of returns of financial assets is the same as that of human asset. If you your asset participate in the society, or you participate in the society with your asset, that gives you some returns like salary or investment return. The key is the right social participation of your assets. This is a big picture of financial investment. There are typically several ways to put your money into the society. Equity, government bonds, deposit in the bank. Just holding cash is not the participation. The law of the investment is very simple. If your money participates in the society in a good way, you could get some returns. Otherwise, not. Also, if you believe a company management get the world richer, you should buy that equity. If you believe bureaucrats or governments or bankers do, buy government bonds or bank deposit. In general, in developed world, private companies create more wealth than the governments and bankers. That's why the returns of equity is higher than others in the long run in the past. But please remember that the most important investment to grow the wealth of the country is very different at developing stage of each country. This slide shows that. In developing nations, left-hand side, like many countries in Africa, building infrastructure is the most efficient way to get higher wealth. In that case, government bond is usually the case for sourcing money, and yield of government bond could be high and could be higher than equity. In advanced developing world in the middle, nourishing key industry like manufacturers is what country should do. Bank deposit plays a key role to nourish that industry. Japan experienced this stage between 1960s and 1980s. At that time, interest rate of bank deposit is quite high, like 10%, because the money in bank enrich the society very, very much. In developed world, right-hand side, innovation and monitoring means overseeing someone, are the keys for wealth. At this stage, private companies and equity investments play more important role than government bond and deposit. This kind of investment, the kind of investment is not a matter, but developing stage is a matter to judge that investment in front of you is good or not. Here is a thing I'd like to mention to the audience. I believe more countries are developed, more equity and private companies are important. At catching up stage to developed world, indirect finance system is very efficient in general. But once countries reach to the certain rich level or certain stage, the role of private companies and equity are increased. 30 years ago, average yield of government bond at G7 countries was over 7%. 7% is big numbers. If you put money on 7%, in 10 years, it's doubled. It's going to be doubled. But now, that rate, average rate is like 0.5%. So a tenth of before. Because basic infrastructure is already there, and a government bond or bank deposit, which goes to the government bond, could not create the same amount of wealth of society than before. Good investment is anywhere, but please remember, returns of the same kind of investment product is different at the developing stage of the society. Anyway, society and financial products are connected. And that connection is that creates wealth and higher return. Okay, the role of equity would be more and more important than before in terms of creating wealth in the world, especially in developed world. The function of equity in the society are twofold. One is back up new activity by someone, like supporting entrepreneur, new company, new starting up companies. Another is to oversee someone having strong influence, like big politicians or top management in big companies. Like election of politicians, citizens or investors make two votes with equity investment. One is buy and sell equities. The second is election of management annually. Oh, I'm sorry. Oops. Okay. Monitoring strong power is quite important to make our world very serious. Big companies have strong powers and use many infrastructures and human assets in the nations. So we have to oversee the top management of the big companies. That's the best way to monitor or oversee the strong power is that both the citizens and the big companies' managements are in the same boat. That ideal feature would be achieved by both holding good amount of equity by citizens and decent amount of equity salary paid to company management. With equities, all of them could be related at the deep level. Then the society goes to wealth. This might be the eye-opening slide. This shows the degree of being in the same boat between citizens and the big company managements. Actually, they are quite different at each nation. In the US, CEOs get paid by equity by 70%. Also, management could not sell those equity for the next 3 to 5 years in general. It means they are aligned to citizens in terms of wealth created by companies. In Europe, this ratio is around 40%, not as large as the US, but a majority part of salary are paid by equity, I could say. Actually, the rest proportion is paid by cash, though most of them is aligned to its long-term profit. So I could say being in the same boat in case of the European top management. This is a bad example, Japanese company. In Japan, the ratio is very, very low, and the incentive cash salary is also very low, unfortunately. Now the Japanese government tries to fix that intensively, as being the same boards or good governance is quite important for the growth of society and Japan. I believe that is one of the reasons why Japanese companies has lost good presence in the global economy. The answer is poor monitoring, or yes. I hope Chinese companies would not make the same mistake. Okay, let's look at the being the same boat, being in the same boat from different angle from investor view. In economic standpoint, any citizens could be the CEO of top global companies from tomorrow, just buying equity of them. You could be a part of top management, economically speaking. I believe that is a very fair system, in capitalism, as not all of us have the equal chance to be at top management of big companies. Like, some people could not get right education due to, family issue or something. But this system is very fair. We could be in the same positions as top talented people in the world. This is the power of equity investment. On the flip side of coin, if the monitoring to the strong power does not work well because of blindness or apathy of people to the system, the society would be poor. That might be happened in Japan, unfortunately, as a Japanese. To manage the growth system after being a developed nation, being the same boat or equity investment is quite important. I'd like to stress. Okay. This is a result of supports and monitoring system of world economy for the last 50 years since the global equity index was developed. There are ups and downs, of course, due to the occasional economic downturns, but in the long run, global equity was delivered nice returns. Let's say 8% in US dollar term. I believe the role of equity is getting more important for the wealth and happiness of the world, as many countries get richer already than before. Also, global equity could be the useful and convenient tools to balance your life portfolio for many people. Okay, I skipped some slide. I summarize mindsets for the success of personal finance on the next page here. Okay. Yep, here is a new mindset of personal finance I recommend to you. Okay, don't think about investment is making money. That is the social participation. Focus on both human and financial asset, meaning your life portfolio. Human asset is intangible or not visible, but that amount and characteristic is quite important to select your right financial asset. Don't chase higher return itself. Instead, try to make two balances or proportions of life portfolio first. Don't think locally, but globally. Global economy is well connected and will be more connected with technology and interaction of people like this. Risk is not short-time volatility, but imbalance of life portfolio or blindness to life portfolio. Okay, here is the summary. Most people have a very limited idea about investment. People only think about money, but that is a very limited view. We should think about our whole life instead. That notion is a key to the success of your personal finance and your life. Life portfolio is a great tool to think about both your life and money together. Life portfolio contributes to your wealth as well as wealth in the society. Okay, thank you very much for listening to my presentations, and I open to any opinions and questions from audience. Thank you again.
Okay, thank you very much, Kay, for your very impressive and insightful presentation. I think it really gives us like the new perspective and a new horizon in terms of the portfolio and also in terms of investment. So with that, I want to turn to our guest, lecturer Paul Jamie Nanon. As we know, lecturer Paul Jamie Nanon is doing about like the financial innovation and particularly focusing in Southeast Asia. So I think that will be very interesting to get Paul your perspective and also any comment or question for Kay. So Paul.
Okay, first of all, thank you so much. I'm personally really interested in in what you just present, especially for the so-called new mindset of personal finance, and also you also put it together with the old mindset, and I think it's very interesting. It seems interesting to me, and for me, I would like to raise to maybe it should be great to hear your perspective on two issues. The first one maybe is also connect to the situation right now for the COVID-19 pandemic, and how to I think it should be great to hear your perspective on how to manage personal finance during the COVID-19 pandemic, or this situation, or which is the most significant implications of this pandemic on the personal finance management, and also what exactly is the influence of technology is having on personal finance management. Yeah, that these are my questions, and it should be great to hear your opinion on that.
Okay, Paul, thank you very much for very insightful questions. Very good questions. To answer the first question about the impact of COVID-19 to the concept of the personal finance or investment of individuals. My answer is don't focus on the short-term events. COVID-19 is the very controversial and very negative negative event to all of us. But and looking at the past, like the past 50 years or 100 years, every 10 years something unexpected happens all the time. No one expected Lehman shock. No one expected Asian crisis, and no one expected COVID-19. And something unknown happened in future, in 10 years, 20 years, definitely. But kind of the, our kind of efforts, all of our efforts kind of create the growth of the society. Most of our things are driven by the innovation from the private companies, and the governments played an important role to allocate the wealth to all the peoples. So, COVID-19 is a very, very big event, a negative side, but we have to think about our potential. We have to believe our potential to create the wealth in the long run. This is my answer.
Okay.
So continue to invest in yourself and in the society. That is my message. The second question is the technologies. How technology affect maybe the investment and finance? Yes, this has been big kind of the kind of the big topics for the last 20 years, I believe. When I was when I started careers, forget about that. Many kind of quantitative investment has developed for the last 20 years because of the strength of the computers powers has strengthened. But and new companies and new starting up companies cannot create by the quantitative method. Human will and kind of the will to change the world create the new ideas and the new companies. And equity and the growth, source of the growth, kind of are attached to that kind of the powers. So of course, quantitative investment is kind of is going to be prevalent more and more, but the essence of the investment is not there. This is kind of my answer.
Okay, thank you so much.
Okay, so here we got a question from our audience. I think the question is, what is the influence of tax policy, corporate and government pension on your personal finance portfolio? So I think it seems to me this question might a little bit connected, as we know now is aging society, and also like reducing the birth rate. For example, not only happen in Japan, but also it's going to be happen in China. We have much more population for the senior person. But previously, for those senior person, what I expect is about the government pension. But it seems now it's like the reverse triangle. And I think for young generation, obviously, we don't have so much money to support like the pension kind of burden to support those pension for the senior person. So what do you think on that issue?
Okay, I guess the question is the how do we tackle to aging problem? Okay, this is kind of the it's kind of the flip side of the coins, but we have to know personal investment more than before because of the aging issues. If we live longer, we have to know more about money and our human asset. So what I want to address to everyone is, yes, kind of learn the right personal finance, like I introduced. Investment is not just making money. Investment is your life, and choose financial product which fits your life. Life is long, and the world economy is connected. So we should have the very big pictures to think about to live in the aging society.
Right. And another question is from the WeChat group from our university, and I think the question is that because during COVID-19, the digitalization is accelerated. We also see like the paradigm is like changing, transforming, and being redesigned. For example, we can see like the stock price of Tesla is like going up dramatically, and also like recently M Financial, part of Alibaba Group, is filing IPO in China and also Hong Kong, and to target 35 billion for their IPO. So it seems like that a lot of things changing. So do you see that from your personal experience? What do you think on that? Do you see that the industry is really changing? And maybe more specifically, what do you think the trend that maybe what kind of sector will be kind of take advantage during COVID-19, and what kind of sector maybe they might be suffering? So kind of like the big picture for the industry and also the stock market.
Okay, thank you, Hangin. I would say, every 10 years, the top 10 or 20 companies in terms of the market cap in the world has changed. Right. Now, GAFA, Google and Amazon, Facebook, and the Chinese Alibaba, Baidu are the, much bigger companies than others. But 10 years ago, the picture was very different. And 20 years ago, top companies are very different. So new companies comes, and they create values of us and society, and would get bigger than now. So this dynamism, build and collapse, are the system of the capitalism and of us, and that creates our values. But the innovations and the mind to change the world, very here, are they always the source of the growth, I believe. So if the top management have the strong will or visions to the society to their company services, I believe that we should follow that's kind of the management. In terms of sectors, let's say, IT technologies and biotechnologies, those two have drive our values for the last 20 to 30 years. So I believe that this trend would continue, but there's something unknown or unknown technology and unknown sectors might come to us. So we have to remember that. Yeah.
Right. Okay, and the next question from the audience is to really ask like, because like you briefly mentioned about that your portfolio is that 90% in overseas. And I think maybe for each person, we have a different portfolio, but the audience just really want to know how do you decide the percentage of portfolio? Can you share like your personal experience?
Okay, yeah, that's good questions, and they're very reasonable questions. It depends on people, but I recommend you to think, the starting point is 50-50 and 50-50 portfolios. Then adjust to that portfolios as long as you are comfortable. Yeah, in my case, I tried to understand the balance of my human assets, Japanese or non-Japanese, Japanese or global maybe, and choose the financial asset. And I try to make the 50 and 50 portfolio. Actually, there is no answers. So, whether you are comfortable or not is very important, because the investment is the kind of marathon, not the gambling in the casino. So if you kind of live life with financial products, you have to be very comfortable. So in this case, kind of 50-50 is a good target or good, starting point of thinking.
Right. And the next question is really from the Master of Finance program student, because we this year we just kickstart the first cohort for our English TOEFL program for Master of Finance, and a lot of students, they just like begin their study for their Master of Finance, literally just like start their new study in this September. So they are very excited to know, given that you already in the financial industry for 20 years. So do you have any advice for them?
All right. Yes, I'm now 43 years old and getting older than many students. Yes, I like kind of the financial jobs very much because I could access to the many informations and I could meet a lot of people in the world. Do
you see any
one thing
or disadvantage?
Advantage and disadvantage.
Yes.
Disadvantage is people are very serious to job and people work longer than others industry, I believe. The advantages are many, accounting, economics, and finance, and you could make use of that, knowledge in any fields. If you start, your career in investment bank, that skill can be useful. At the starting up companies, for example, after 5 years careers. So yes, I still recommend young people to start your career in finance areas, because there are many basic, we can learn very basic knowledge of the business in this field. But this is my personal opinion.
Right. So I think the next question is also really focusing on your working experience. I think given a lot of young students, they are really like very excited for their career, given I think also COVID-19. I think the job market is getting tough, especially in 2020. So the question is now, is the globalization society. So we also see a lot of talent, they travel to overseas, to the United States, to the United Kingdom. And given that you had the working experience in both in Japan, in London, in New York, would you like to share like your working experience, and maybe do you see any difference among these three places?
All right. Yes, I have lived in 3 countries and I experienced a lot. But I mean, the international environment is quite important. You know, actually, the questions from the Chinese audience is very different from the questions from Japanese people. If I present the same content to others, so kind of the that's kind of the interactions of in diversified environment is very, very important, and that is necessary for young people, I believe. So I don't want to stop my I don't want to stop to kind of the enhance my global career or kind of the global thinking. So I put the one mindset and don't think locally and think globally. That is getting more and more important, and especially if you are young and you have a lot of potential. So yeah, of course you focus on what you like, but keep your international friends for long. That is my advice.
Right. Okay. And the next question, I think it seems to me, is a little bit coming from our faculty members because the executive pay, the CEO pay, is the issue always being discussed, particularly during like the time of crisis. But as you mentioned, that the structure, how like the CEO is being paid by the company in different countries also have the different design. So what do you think that makes the difference that in the United States is 70% and in Japan is 13%? Because I think that mechanism is not really which one is good, but which one is bad, but it's much more like how does like the general picture looks like. So it will be really good to get your perspective on that.
Okay, I show the numbers, how much salary is paid by equity. Yes. Yeah, as you said, and in the Western world, that number is higher than Japan and maybe than China. Yes, but the system and the power of the capitalism come from the kind of some fairness and the concept of being in the same boat. And so equities are the equity and capital is the great systems which was innovated in 60th centuries. So kind of the founders of Panasonic, Matsushita in Japan, like it was like 15 years ago, very long time ago, but the kind of he said all of Japanese should be the investors of the all Japanese companies. Do you understand it? So that is one of the very interesting ideal feature of the capitalism. Yeah, capitalism have the side effect. It's like inequality of the people, right. And that is a big issues. One of the big issues for the capitalism to pursue the capitalism, right. But being in the same boat, that is it's getting more and more important in anywhere in the world.
Yeah, I'm quite agree with you because when people sometimes talk about like the advantage and the disadvantage, how like the CEO and the executive we should decide for their pay. For example, in the United States, they have the high percentage of equity, and sometimes like they also set the condition for the CEO. So if you can achieve like the certain revenue in a single year, which you can get a lot of bonus, but it also creates some problem. For example, the CEO is coming to maybe just fire a lot of employee and also to just like to do something bad to get the revenue high and to get the executive pay they wish. So I think that is very interesting to continue seek the solution how to design a reasonable executive pay for dealing with some problem.
Yeah, we are in the process to find the best way to manage the society or to make everyone happy. Right. No, any one ideology or economic theory is right. So we have to kind of mix some of them, or we have to know most of them to make use of some notions of each theories and ideology, I believe.
Right, right. Thank you very much. So I think it's almost approaching the time. So Lecturer Paui, do you have anything want to add?
I don't have anything. Yeah, but again, thank you so much.
Okay, thank you very much, Mr. K, for bringing us the latest concept and also the new concept, new idea of your new book. And I wish that your book like a big success. Thank you very much for this discussion.
Yeah, thank you very much. And it is great honors to be invited to this event. And I really appreciate. Thank you.
Right. So I hope to see you in person, maybe in Tokyo or in Hangzhou or maybe in Bangkok.
I would like to go to Hangzhou. Yeah, in the future.
Okay. Thank you very much once again.
Thank you so much.
Nice
Thank
evening.
you so much.
Bye.